New income tax slabs introduced in Union Budget 2025. Finance Minister Nirmala Sitharaman has revised the income tax slabs under the new tax regime in the Union Budget 2025. These updated tax slabs will take effect from 1st April 2025 for the financial year 2025 to 26. The structure of income tax under the new regime has undergone significant changes. The revised tax slabs for FY 2025 to 26 are as follows. Income up to 4 lakh rupees, no tax. 4 lakh rupees to 8 lakh rupees, 5%. 8 lakh rupees to 12 lakh rupees, 10%. 12 lakh rupees to 16 lakh rupees, 15%. 16 lakh rupees to 20 lakh rupees, 20%. 20 lakh rupees to 24 lakh rupees, 25%. Above 24 lakh rupees, 30%. Under these new slabs, taxpayers can benefit from tax savings of up to 1.14 lakh rupees per financial year. The new tax regime remains the default option. A key highlight is the proposed increase in the tax rebate under Section 87A to 60,000 rupees. This means individuals earning up to 12 lakh rupees will effectively pay zero tax. Currently, the rebate applies to incomes up to 7 lakh rupees with a maximum benefit of 25,000 rupees. Additionally, the basic exemption limit under the new tax regime has been raised from 3 lakh rupees to 4 lakh rupees. However, deductions remain unchanged. Taxpayers can continue to claim standard deduction of 75,000 rupees for salaried individuals, employer's contribution to NPS Tier I, 14% of basic salary for government employees. The surcharge on income tax liability under the new tax regime remains unchanged for FY 2025 to 26. These changes are expected to make the new tax regime more attractive, encouraging more taxpayers to opt for it. However, the old tax regime remains largely unchanged with one notable addition. Parents investing in the NPS Vatsalya scheme for their children will now qualify for deductions under Section 80CCD 1B of the Income Tax Act. This deduction is over and above the 1.5 lakh rupees limit under Section 80C, allowing for an additional 50,000 rupee investment in NPS. Additionally, taxpayers earning up to 5 lakh rupees will continue to receive a tax rebate of 12,500 rupees. The primary distinction between the two regimes, old and new, lies in the availability of deductions and exemptions. The new tax regime does not allow deductions under Section 80C, 1.5 lakh rupees for specified investments. Section 80D, 25,000 rupees, 50,000 rupees for health insurance premiums. Section 80TTA, 10,000 rupees on interest from savings accounts. Choosing between the two regimes, individuals must actively opt for the old tax regime while filing their income tax returns if they prefer it over the new regime. Those without business income can switch between the two regimes annually. However, individuals with business income can only switch from the old tax regime to the new one once in their lifetime. Once they opt for the new regime, they cannot revert to the old one. Here is a comparison of the old versus new tax regime for FY 2024 to 25, A 2025 to 26, based on the latest updates from the Union Budget 2025. New tax regime is the default choice. No tax on income up to 12 lakh rupees. Lower tax rates than the old regime. No deductions exemptions allowed. Example, ATC ATD HRA. Standard deduction of 75,000 rupees for salaried individuals. Section 87 a rebate. No tax if income is up to 7 lakh rupees. Old tax regime allows deductions under Section 80C, 1.5 lakh rupees, 80D, health insurance, HRA, home loan interest, 2 lakh rupees, etc., suitable for those with significant investments in tax-saving instruments. Higher tax rates, but benefits from deductions. Finance Minister Nirmala Sitharaman, in her Budget 2025 speech, announced that there will be nil or zero income tax for individuals earning up to 12 lakh rupees. But Did you know that for salaried individuals, the tax-free annual income can reach 13.7 lakh rupees compared to 12 lakh rupees for others? This advantage of no tax till 13.7 lakh rupees income stems from the 75,000 rupees standard deduction and National Pension System (NPS) investments. Section 80 CCD 2 allows tax deduction of up to 14% of basic salary invested in NPS, whilst the old tax regime offers 10%, which means salaried individuals with 13.7 lakh rupees yearly income can achieve tax savings of approximately 96,000 rupees through NPS contributions. It is important to note that this benefit requires employer participation in NPS as part of cost to the company, as employee cannot opt independently. The employer's 14% NPS contribution for government employees and 10% for private employees are correct, but it is not universally available. How does this work? 1. Basic exemption limit. The new tax regime has a 4 lakh rupees exemption for all individuals. 2. Standard deduction. Salaried individuals get a 75,000 rupee deduction from taxable income. A standard deduction is a fixed amount that is deducted from your taxable income before calculating tax. It is available to salaried individuals and pensioners without requiring any proof of expenses. 3. Tax rebate under Section 87A. If total taxable income is up to 7 lakh rupees, you pay zero tax due to a 25,000 rupee rebate. For income up to 12 lakh rupees, tax rates apply. But due to lower tax slabs, effective tax liability is reduced. Example calculation for 12 lakh rupees income. Income slab 0 to 4 lakhs is 0%, so the tax amount is 0. Income slab 4 lakhs and 1 to 8 lakhs is 5%, so the tax amount is 20,000. Income slab 8 lakhs and 1 to 12 lakhs is 10%, so the tax amount is 40,000. Hence the total tax before deductions 60,000 rupees. And standard deduction 75,000 rupees reduces taxable income. So effectively, final tax liability is 0 for 12 lakh rupees income. The final tax liability depends on how the rebate is structured under the new rules. And for an annual income of 13.7 lakh rupees, with basic salary at 50%, 6.85 lakh rupees, the NPS contribution at 14% would amount to 95,900 rupees. Combined with the 75,000 rupees standard deduction, this eliminates tax liability of the entire 13.7 lakh rupees. The tax-free income claim of 13.7 lakh rupees requires employer participation, and not all employees have this benefit. You must ensure this is clarified from your employers before assuming anything. Now, let's discuss which one is better. If you invest heavily in tax-saving options like PPF, EPF, and insurance, the old regime may be beneficial. If you prefer lower tax rates and no deductions, the new regime is likely a better choice. No tax for salaried individuals up to 13.7 lakh rupees due to the 75,000 rupees standard deduction and NPS contribution in coordination with employer. For non-salaried individuals, no tax up to 12 lakh rupees due to lower slab rates and rebates. This makes the new regime more attractive for middle-income earners. With these major changes in the income tax structure, the new tax regime is now more attractive for many taxpayers. Whether you choose the old or new regime, it all depends on your financial goals and tax-saving strategy. Make sure to analyze your income, deductions, and investment plans before making a decision. If you found this video helpful, don't forget to like, share, and subscribe for more updates on finance and taxation. See you in the next video. Stay informed and stay ahead.